Now, let's be fair. We may have been down 7% in the market today, but at least we weren't down, oh my gosh, 40% after hours for Stitch Fix on top of the 7% it was down to begin with. This thing lost nearly 50% of its value in one day. And no, we're not talking about those biopharmacy stocks. This is Stitch Fix, okay? This thing got obliterated like no freaking other. This is based off an earnings report. Let us find out what the crap happened to Stitch Fix that made it drop this bad. I mean, that's an absurd amount. Whew. So, obviously, get those ads out of here, right? We don't play around with those. Stitch Fix beats on an EPS standpoint by 4 cents. Okay, GAAP EPS of 11 cents per share. That's something good, right? I mean, that's not what I would consider bad. Profitability for a newer IPO type company, I mean, profitability is pretty good. But revenue, all right, plus 22% year over year, right? That's good. They missed by 0.79 million, which is obviously a decent chunk for them with a 450 million amount. But I mean, it's not that crazy. They're not missing out on that much on that aspect. They still grew 22% year over year. That's good growth. And originally, these shares were only down 1%, right? That was the start. And it only gets worse is the conference call. It only gets worse. Stitch Fix falls after the retailer's 22% sales growth during the quarter fell short of consensus estimate. The retailer also posted EBITDA of 14.3 million during the quarter versus 13.2 consensus. Okay, so they were more profitable than expected. I mean, that's good news, right? Stitch Fix active client list rose 17% to 3.5 million. Net revenue per client was up 8%. I mean, expectations. Woo! All right, guys. That's why you always read. That's why you always got to keep reading, because expectations for quarter 3 revenue of 465 to 475 million versus a 506 consensus, which is a good bit away from the consensus. But is it 40% away from the consensus? I call this an overreaction, buddy. I mean, we're talking about still, it would be a quarter-over-quarter growth is what they're calling for. So they're still calling for growth. It's not like they're not calling for growth. And with all these macroeconomic issues happening right now, I don't think that's too absurd. What is going on with Stitch Fix stock? I feel like this thing could bounce back pretty high as a result of this. But I want to keep looking at some of this information and see what exactly they have to offer. So first, you got to visit the, investor relations page. That's what we got to know. Stitch Fix, gotta love them. Let's look at these. Let's look at this press release that they released. Okay. So highlights, a 17% increase in clients. Good for them. Revenue per client up 8%. Good. Revenue up. Net income of 11.4 million. I love to see that. Founder and CEO Katrina Lake. That's right, Katrina Lake. I really like her name. She's pretty cool. We are pleased to deliver another strong quarter in quarter 2. Net revenue was 452 million, in line with our guidance, and a little bit lower than guidance, but that's fine. We grew active clients to 30.5 million. Good for them. Pretty much you're just saying all this. But like added, this quarter we're excited to expand our new direct buy offerings to even more clients. As we continue to evolve our personalization capabilities, we're confident in our ability to capture additional market share and deliver on our mission to transform the way people find what they love. I mean, that's some good stuff. This lady knows what she's talking about. She knows exactly what she's talking about. So let's take a look. Obviously, we want to look now, if we can, just give me a peek at this shareholder letter, okay? Give me a peek, because obviously we want to look at this too, because it's got some good information on it. So increase of 504. Gosh, I mean, they grew 504,000 customers. That's crazy. Leverage strong cash flow of our women's category to fuel growth and margin expansion in men's, which we believe is still in the early stages of growth and profitability. We believe our direct buy offering and rollout to all U.S. women's and men's clients. We drove styling, efficiency, and stronger client outcomes through our new adaptive styling platform. Okay. I mean, these are good things, right? These are good things that I'm catching from this. Business highlights, continue to leverage the strong cash flow in the women's to fuel men's. I mean, very good for them. Women's currently makes up the large majority of their business, which is not too much of a shocker. It's not like this brand is one that has really extended out to the male demographic that much at the moment. So there's a potential that they have a good market to gain there, for sure. But U.S. women's offering consistently delivered positive cash flow. 45 to 60% margin. I mean, that's very nice. It surpassed that margin, so that's very good stuff. We believe men's category is still in the early stages of growth, so that's just a good start there. I mean, they could have a lot more growth in terms of the men's. As far as kids are concerned, they are pleased with the performance, introducing shop new colors to approximately 1/3 of kids' clients. Good for them. We improved the direct buy offering, so I like that. Again, I've made this argument before too. I think there is a limit to what online retail can do as far as the clothing sector is concerned, because not that many people are actually going to be wanting to buy clothing online. A lot of people want to do it physically, so you actually know what you're getting. Sizes are different in every single brand, as I've mentioned before, so I understand what's going on here, and I think they make it easy. Stitch Fix makes it pretty easy to return things too, so that is one thing to consider. They began to also collect client feedback data on shipped items, which will enable us to further strengthen our personalized recommendations. They enhanced their algorithms to further diversify the looks we present to clients. So, therefore, more potential sold items. I mean, am I crazy here? I don't know. Maybe I am crazy. I mean, obviously a pretty good increase, it looks like, in terms of selling general and administrative expenses. So SG&A was up this year. But if you look, I mean, it was the same as what it was for fiscal year 19, a little bit lower actually. So nothing crazy going on there. They're continuing to make strategic and measured marketing investments, obviously spending a good bit in terms of marketing, trying to get the brand out there. Expenditure total $11.4 million. So free cash flow generated of $26.8 million. Good for them. Guidance still representing a 14% year-over-year growth. They are expecting a loss, though, is something to consider. So $10 to $4 million in terms of loss, which you don't like to see, for sure. I don't know. This is an interesting thing to look at. This is a company that I've been interested in getting into. People might think it's crazy, but I think this is a company it's run by smart people. I think they know what they're doing. So what is possible here as far as investment direction goes? I mean, shoot, I don't know. We're talking about a company that in the past year is down 50%, and that's obviously including this. And they are below IPO point, which IPO point was somewhere around $17, I believe. Right now it's a $12.89 stock, or whatever it is. $12.80 something. What the heck is it? Sorry. It's actually a $12.77 stock. I want to see if this thing doesn't rebound hard tomorrow. I mean, if it's opens up somewhere around 40% down, which I highly doubt it will, I think I'm going to buy this stock heavy. I think I am. I think there's value in this stock, which I know could be crazy, but this company's making profit. revenues are on a good uptrend, and they're very future oriented. I mean, this is a company that's really focused on the future of retail. I think this is a interesting investment opportunity here, and I think I'm gonna go for it. I know you may think I'm losing my mind. I think I'm losing my mind. You know that song? That's what I feel like. I don't think I am though. I sounded just like that song, but regardless, I think I'm gonna buy some freaking Stitch Fix stock. You call me crazy, but if it opens around 40% down, I guarantee I'm buying this thing. Regardless, probably some sort of call option, because this thing, I think, has the potential. It's got potential. P-E-T. That's not how you spell. I'm not a cheerleader. I'm sorry. That's it for you guys.